so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in and we finally have our new weekly update from Redfin about all things in the housing market. And today, you guys are going to absolutely love going over this with me because it appears that we have finally reversed the trajectory of some of the unfavorable trends that we've been seeing. If you're like me on the sidelines, waiting for a continued, not to start. We've already started the crash, okay? I'm going to use the word crash, so sit down, all right? Don't get too triggered, all right? But it is crashing in many metro areas, and to discredit crashing in many metro areas would be doing yourself and other people a disservice because it is a sign of things to come. It is a red flag. So pay attention to what's going on. And one of the ways we can pay attention to what's going on in the housing market is follow the data, not the emotion. And remember this, you guys, I am not a financial advisor. I'm just an emotional renter right now that is so frustrated. I'm looking every single day. I'm trying to find a home that I love at a great deal, and I'm not willing to settle for anything but that. And if you guys can, for my overwhelming dedication to doing videos and to holding firm on my goals of purchasing real estate and for taking you along that journey with me, please like this video, subscribe if you haven't already, shoot me a comment below. But either way, you guys, I really appreciate you watching this video. I'm really looking forward to showing you the reversal of some of these trends because I believe that we are in store for some very, very dramatic changes in the housing market in just a few months or even weeks. The name of this week's Redfin article is Housing Market Update. Demand outpaces limited supply, making some markets feel hot despite few sales. Pay attention to some of the things that Redfin is saying. I'm actually proud of them for how they break down the current trends in the housing market. So it's actually super proud of them. And let me know if you guys agree with what they're saying. And here's how the article begins. Limited new listings are making it feel like a seller's market in some parts of the US, even though sales are down by double digits. But some markets still feel cool with for sale homes lingering on the market. Interesting. If it feels like there aren't enough homes on the market for the people who want to buy one, it's because there aren't. Even though elevated mortgage rates continue to dampen home buying demand, low inventory means the homes that are for sale are going fast in some parts of the country. But the reality is that may only be the really, really good homes that are going fast, which is normal. Let's continue. Many homeowners are staying put because they're unwilling to give up their low mortgage rate. Although average 30-year mortgage rates posted their fourth straight decline this week, dropping to 6.28%. That's more than double the sub 3% rates common in 2021. It would take 2.8 months for today's supply of for sale homes to sell at home buyers' current consumption rate, the shortest time since September. That's a sharp drop from the 3-year high of 4.5 months in late January. And we love that, by the way. We actually got all the way to 4.5 months. And it marks the fastest winter decline in months of supply since 2015 in percentage terms. It's up from a near record low of 1.9 months a year ago. Now, I want to point out that year over year, we're actually higher. We were at 1.9, we're at 2.8. But it's also interesting to point out that around the start of the year, we had a massive surge of home buying demand almost out of nowhere. Now, it since then has appeared to actually disappear completely. But there was an initial surge, and it really surprised a lot of people, including me. Some people think that's a result of tax refunds. I believe that's possible, but it's also a result of emotion, in my opinion, and people just moving. Really, really wild. Today's serious home buyers. Okay, so again, this is only for serious home buyers. If you're not a serious home buyer, this doesn't pertain to you, according to them. Today's serious home buyer have grown accustomed to the idea of a 5% or 6% rate and have adjusted their budgets accordingly. The lack of homes hitting the market explains why the market is moving fast, even though sales are still down. The lack of new listings is also one reason why sales are down. Buyers can't buy if sellers don't want to sell. Or rather, buyers can't buy if they can't afford to buy. While new listings are down in every major US metro, the trend is more dramatic in some areas. In Denver, where new listings are declining at roughly the same pace as the national drop, and there are just 1.6 months of supply. That's bad for Denver. We know that we do need more supply. That is a fact. But I would argue, more importantly, is we need we need prices that are grounded and anchored to fundamentals. Prices that people can afford. This goes on. Shiny new listings are getting multiple offers and selling fast. The caveat is that they have to be priced correctly from the beginning. So this is not something to where sellers are just listing their house for whatever and they're getting multiple offers on their house like we had this time last year. This is happening to homes that are priced correctly. In Austin, a pandemic home buying hotspot, buyers can take their time and they have a better chance of getting a home under list price. Inventory is piling up. Austin has 4.4 months of supply, more than almost anywhere in the country, and prices are down nearly 15% year over year, not from peak. From peak to now, Austin's down, y'all, 20%. If anyone houses you, oh, this is not a housing market crash, say, well, what about Austin? And doesn't the crash have to start somewhere? Buyers have more power right now. The silver lining of high rates and the slow market we've been experiencing here is that some locals are unable to buy in neighborhoods they couldn't have gotten into last year and get contingent offers with small down payments accepted. So overall, let me know what y'all think. So a little bit of optimism there, but overall, I like what they're saying. They're saying new listings, not the old junky listings, new listings that are priced right, probably really nice houses, are selling quickly. At least they were at the time that they wrote it. When I get into the graphs, I'm going to show you a lot of these trends appear to be reversing. Home prices are falling. Okay, haters? Home prices are falling, Dave Ramsey, in many metro areas, not just Seattle. Why did he say only Seattle? That was the craziest thing when he said that. But they are rising in others. So to the haters, there's your narrative. You get to hold on to your little narrative. Now, home price dropped in more than 28 of the 50 most populous U.S. metro areas, which means 46% of the top U.S. metro areas have year-over-year price decline. Again, that's not peak to trough. That's just comparing 1 year to 1 year. So the losses are substantially more from peak. Now, Austin's number one, and I'm going to get out to Austin soon. That's a year-over-year decline of 14.7. And then here comes crashing in the West Coast metro areas. Sacramento at 11, Oakland at 10, San Jose at 10, and then another West Coast metro of Seattle at 9.6. On a national level, the U.S. median home price fell 2.1% year over year to roughly 362,000, making it the seventh straight week of declines after more than a decade of increases. This is not seasonality. The housing market right now, when we actually take out seasonality, the housing market starts crashing. When we take out seasonality, the housing market right now starts crashing. At least that's what we see so far. 2.1% national average of year-over-year price decline. And that's going to balloon once we get to the peak months around the end of May and into June. It'll probably hit double digits. Looking at this week's leading indicators. So let's start at the 30-year mortgage rate, which dropped to 6.28%. It says the daily average is 6.13%, but I could tell you I went on and looked at interest rates for this video. It's close to 6.4% right now. So interest rates are doing a bit of whiplash right now. Now, here's what's really important to understand. Mortgage purchase applications declined 4% from a week earlier, but are down 35% from a year earlier. That is huge. I don't think I could put into words how big a deal that is. Redfin Homebuying Demand was up 6% from a month ago, but it is down 23% from a year ago. People looking for houses online, going to Google searches for homes for sale, was up 44% from the low in December, but it is down 20% year over year. Starting at median sales price. So obviously week over week, we are up, but I think you guys can notice that this trend line right here, which is this year, the orange line is this year, it's not skyrocketing upwards. it kind of starts to look like it's losing steam. At least that's what I'm saying. Now, remember, let me show you the trajectory of median sales price, at least what I see. So you guys remember, I think that it was going to go up a little bit and then whiplash downward. And I am anticipating that it is possible that it does go under the blue line, which represents 2021. If that orange line goes under that blue line, that will mean that the national average median sales price is now under the last 2 years. It's not there yet, as I said. It is still going up, but it appears that it is decelerating its upward trajectory, which is absolutely fantastic news. And again, this is a 2.1% year over year decline. Median asking price. Now, here's something that is finally beautiful. Now, obviously, median asking price is leading median sales price. And if we really zoom in here, you guys can see that week over week, you see this? We plateaued. Thank goodness. So we finally plateaued, which is really, really important that median asking price stays under that red line, which it has not like all year. But I'm gonna say within about 3 weeks, I'm gonna say this by the end of April. Okay, so another 3 reports. So the third report, okay, the end of April is gonna show that orange line go underneath that red line. All right, that's what I'm anticipating. End of April, median asking price goes under 2022. So again, it did balance out. Thank gosh, guys, that's exactly what we want to see. A lot of people were freaked out, and I expect it to go like this. Okay, I expect it to do that. Again, hopefully getting under that blue line. And we do know median asking price does lead median sales. So it is important to look at median asking price. So here we have our housing payments. Now it does say it's only up 14.9% year over year, but I want to remind you guys that there's flaws in multiple ways to use data. One of the flaws with year over year is it's just year over year is really not what you want to use, in my opinion. You want more immediate things. So even though it's showing, again, year over year up 14%, the mortgage payments are somewhere between 30-40% higher than they were in 2021. So even though it appears that mortgage payments aren't that much higher, they're a lot higher. And again, 2021 was way down here. Mortgage payments were under 1750 2 years ago. 2 years ago, 1750. They're over 800, they're about $800 more right now per month. We're way up here, okay? So the average mortgage payment is still over $2,500, sitting at $2,508. And again, remember, the interest rate that they're using, it's not even that low anymore. Interest rates are higher. But as far as week over week, mortgage payments did go down very, very slightly. So here's pending sales. Pending sales is down 19% year over year. Also, as you guys can see, new home listings is down 22% year over year, and that is the lowest it's been in the last 4 years. You can see the orange line right here is under the last 3 years of new listing inventory. And here we have our months of supply available on the market, and I told you guys the trends are starting to reverse. And maybe one of the most important trends is actually the months of supply available on the market. So thank goodness, y'all. And I anticipated it, but we finally had a week over week increase. So again, Jeff, Vital, Johnny, we had a week over week increase in months of supply available on the market. And I'm trying to tell y'all, it's probably, I'm pretty sure here, I'd even put money on it, it's probably going to skyrocket up from here on out as we enter spring, summer inventory drop months. But isn't that beautiful? You guys can see it did go up slightly week over week, but look at how much it's been going down. It's been going straight down, y'all. It has been scary. People have been freaking out. I've been a little bit nervous as well. I'm like, oh my gosh, this is not good. We just had 4 months, but remember, we want to get to 6 months. So again, this is going to go up. All right. And it's probably going to go up pretty rapidly. We'll start seeing that again more when we get closer to the end of May, the beginning of June. Another beautiful thing, listings with price drops. We had 5% of listings with price drops. That's good. This is what we want to see. That's one of the leading indicators as far as what rates are doing to median sales price. And you guys can see week over week, it went up. So y'all see what I'm saying? We're starting to see the trends reverse or potentially start to change. Median sales price, asking sales price, listings with price cuts, months of supply. These are really good trends that we're seeing right now. And I hope you guys see that too. We'll end here with Redfin Home Buying Demand Index. That is down 23% year over year. We kind of went over that in the reading, but what I wanted to point out is here's where we're at right now. We want to be way down here for 2020 levels when we were in lockdown. All right. That's where we want to be. We're not there. We're still up here, right? We're still way up here. The good thing about home buying demand is it is lower than 2022 and 2021. So that's a good thing. But nevertheless, it did go up week over week. So we'll want to keep our eye on home buying demand. In conclusion, I hope you guys see why I keep pounding the table and warning people to pump the brakes, warning people to be careful what they listen to and be careful what their feelings. We are only in the second inning of this housing market crash, reset, correction, whatever you want to call it. We're only in the second inning. In other words, we need more time to go by. And the fact that we're already potentially seeing all of the bad trends reverse is a sign of great things to come. Patience is a virtue. And don't forget what luck is. Luck is opportunity plus preparation. Without the preparation, there is no luck. So stay prepared. How? Work on credit, income, assets, become an expert in your local housing market, and have a great mindset. Love your life, love your family. If you get stressed about waiting for the housing market like I get stressed, take a walk. Remember why you love life. Remember why you're doing what you're doing, because you're a responsible future homeowner. Don't forget that. Now, other than that, I really hope you guys enjoyed this video. I hope you guys got some new insights, value, and perspective. And if you're out there investing in real estate, you know I wish you luck and I hope you win.